So I just received a question about dividend investing that I love. This is a really good question. It's the core of what this channel is about, what my strategy is about. And the question goes like this. Hey, Ian, I can find stocks that don't pay dividends. I can find stocks that don't pay dividends that do really well. They've had really good returns over the years, and they in some cases, I think I might even be able to outperform dividend stocks with non-dividend stocks. And I don't want to dispute that right now, but looking at historical data, maybe not in the most recent years, because some of these tech stocks, the FANG stocks, the Facebook, Apple, Netflix, Googles of the world have done really, really well. But when you look at the historical track records of the market, going back to the beginning of the time, typically value stocks have done really, really well. And they've oftentimes outperformed growth stocks. But it surely seems in the most recent years that these FANG stocks, these tech stocks have done really well. And so the question goes like, hey, Ian, I can do really well on some of these stocks that don't pay dividends. So why would you even consider buying a dividend stock? Why do you have this strategy at all? In fact, it somewhat seems foolish that you would buy dividend stocks. And that is what today's video is all about. Hey everyone, welcome back. This is ppcian.com YouTube channel. My name is Ian Lopuck. I'm an investor. I invest for passive income and cash flow. I'm answering a subscriber question today about capital appreciation stocks, those high growth stocks, versus dividend stocks, the types of stocks that I like to invest in. And so at the core of it, the reason that I like dividend stocks is I can pay the bills with dividends. And if one is looking to pay the bills with their stock portfolio, surely the growth stocks have been up and to the right in recent years, but a typical stock chart looks more like this. We're probably in this leg of the race right now. At a certain point, they will come down. There will be a big retraction in value. They will go back up, back down, back up, and eventually hit new highs. But there's a lot of ups and downs, and this could be years of time of waiting. And the challenge with growth investing in stocks that don't pay dividends, in my opinion, is that if one needs that money, one wants to pay the bills with money from those stocks like I do, you just can't rely on it. It's impossible to time the market, or nearly impossible. And one would hate to buy here and then have to sell down here to pay their electricity bill, or maybe have to sell again down here to pay their mortgage. One wants to be able to hold on to stocks over time, to be able to enjoy all of the upside. And it's just very, very difficult to buy growth stocks and have to sell fractional shares over time, to literally sell capital, principal that's been in the stock to pay bills. It just doesn't resonate with me, and it just doesn't seem practical. By contrast, let's assume now, looking at both charts, let's say we're looking at a dividend paying stock. The same stock, it's going all over the place. Let's say it pays a dividend. Dividends in my portfolio, dividend growth stocks, typically look like this. They grow the dividend over time. So it starts here, notches up, keeps growing. Doesn't matter where the share price, it could be a good year, it could be a down year, it could be a good year, a down year. It keeps going up. And the beauty of this is I don't care what the market thinks of my stock at a certain time. The market has been known to be a voting machine. This is Mr. Market. There's fear, there's greed. This is something that Warren Buffett talks about quite a bit, and he inherited this knowledge from his mentors as well, from Benjamin Graham. If one wants to learn more about this, there's two books in particular, Security Analysis and another one called The Intelligent Investor. These are classics that inspired Warren Buffett to be the investor that he is. These books really share the philosophies that shaped Buffett's opinion of how the market is just a voting machine. On any given day, it's just voting. What's the stock worth? Is it a greedy day? Is it a fearful day? Could be any day. And if you were relying on an irrational marketplace to tell you what something is worth on a certain day and then have to sell fractional shares or to pay bills, it just is not practical in my opinion. I don't see how that would ever work. And so for me, dividends have been the answer because the best companies, these world-class companies that pay dividends, they are predictable. I don't have to look where the share price is. I just focus on my dividends, and the stream of dividends, passive income checks that I literally get quarterly, they are very dependable, and I can use those cash dividends to buy stuff. And I don't have to tap into the capital, the principal. I let that grow so that the dividends can keep growing. And just a little trick here that I do in the short run, I don't live off of dividends right now. I will in the future, but what I'm doing is I'm taking my dividends and reinvesting them right now to buy even more stock. But eventually, I won't be doing that. I will be living off of the dividends. But in the short run, I can actually take my dividends, buy more shares of stock, and it creates the snowball quicker. It compounds my success. So I love that about dividend stocks. And so to answer this subscriber question, at the end of the day, maybe one can do better in the short run on these FANG. In the long run, I think it's going to be time will tell. Time will tell which strategy is better. But the fact of the matter is, if one is looking to generate income to pay bills, it just is not practical to go with stocks, in my opinion, that don't pay a dividend. So as I always do, I got my notebook. I jotted down a few more points today that I want to discuss. And another one that I think is really important is this. When one owns a stock, they don't just own a stock. A stock is a physical representation or a paper representation, digital representation of ownership in a company. When one buys stock, they own a company. Literally, the companies I own, and I own over 30 of them, I've been investing for over 20 years, I own these companies, I'm an owner. The people that own the company should be rewarded. The shareholders, they need to be rewarded. I like shareholder-focused companies. I like companies that reward the very people that own them. After all, the people that should be rewarded are the ones that put their money to actually own the company. And so what I have typically found is a company that pays a dividend, they are more shareholder friendly. They're more shareholder oriented. And that's just important to me. It's really important for me to hold companies that reward me, respect me, thank me for being a shareholder. They're like, Ian, you know what? You own the shares in this company. You deserve these dividends. That's meaningful to me. It's a meaningful philosophy that stocks that don't pay dividends, they don't always look at shareholders as owners in the company, in my opinion. They don't always respect the shareholders who put their hard-earned money into the company as much as they should. And so that's another reason I like dividend paying stocks. Another thing about dividends, when a company pays dividends and returns the cash to the shareholders, the company has less cash left. Companies sometimes can waste money. Human nature is, if cash is just sitting around, let's find something to spend it on. Let's have a more extravagant holiday party. Let's send the executives on a first-class trip to Hawaii. Let's get really fancy holiday gifts for all the employees at this company. I'm not saying these things are necessarily wrong. I think companies and executives and employees should be rewarded from time to time. But what I'm saying is there can be a huge excess in that happening if there's just a lot of cash sitting around. And so what I like is shareholder-friendly companies who return the dividends to the shareholders. I believe they are set up for success. I believe they are set up for better money management success because there are less distractions. There's not so much money sitting around that could potentially, quite frankly, be abused. And so that's really important to me from a fiscal responsibility standpoint. What else? Dividends are tax efficient. So here's the deal. Let's say I buy here, sell here. I got to pay bills after all. I'm buying low, selling high, so I'll do that. Well, if this is less than a year, I'm going to be paying higher level of taxes. It's going to be taxed as ordinary income. Whereas dividends, they're typically a qualified dividend is going to be taxed as long-term capital gains, so it's a lower rate. Dividends are tax effective, whereas buying low and selling high, it is, unless it's over a year, it's not tax effective, and it's just not effective from a strategy of paying bills. So just a fun video today. I want to close out with one thought. Look, I love dividends. It's my strategy. It's a strategy that works for me. I have been handsomely rewarded over the years because I tend to beat the market with this strategy. But it may not be for everyone. There are certain people who have done really well with these tech stocks. They've done really well with the growth stocks that don't pay dividends. So I'm not trying to say necessarily that I have the only solution or there's no other solution, because that would be ridiculous. That'd be very closed-minded. But what I'm saying is, for someone who wants financial freedom, they want their money working for them, paying cash flow that can be used to cover one's living expenses. I just don't see how the capital appreciation strategy would accomplish that the way that dividends accomplish that. Surely if one wanted to continue to work a job, they wanted to continue their lifestyle, and they're just trying to grow money, and they weren't necessarily looking for dividends, they weren't looking to pay the bills, maybe that's a strategy that would work really well for that person. And so I'm just trying to say, I don't want to put down one strategy or another, but I'm just trying to share why this strategy has been so core for me, why it's been so important. Because my goals, I'm thinking in the future, I'm thinking about my future self, and every day when I place money in the market, that money instantly goes to work for me. It instantly starts spitting off cash flow that can be used literally to improve my life without even touching the nest egg, without even touching the principal. And so I just love dividends. Dividends are the greatest thing ever, in my opinion. My name is Ian Lopuk. I'm from ppcian.com. Just a friendly disclaimer, I'm not a licensed investment advisor. Today's video is not investment advice. It is just for your fun and entertainment. If you are going to go out and invest in the stock market, please consult a licensed financial advisor first. If you enjoyed the video today, please subscribe to my channel, like, comment. All of that means the world to me. We are going strong here on PPCE, and we're now up to 2,500 subscribers and counting. This channel is getting bigger. I love it because the amount of comments coming in are greater than ever before. And that's what it's all about. It's about the community, and it's about dividend investors helping dividend investors. And I hope there are people on here that are not dividend investors as well, like the person asking this question. And quite frankly, I hope I actually did not necessarily change your strategy, because we all have to find the strategy that works for us. And some of the comments I get here on the channel, one of them recently, in fact, said, "Hey, Ian, I hear what you're saying, but it's not for me. I've chosen to do something different." I love that, because all of us need to think independently. We need to find what we want to do, and the most important thing is the commitment. And once we commit to something, to stick to it. And so if people are watching this stuff and they don't resonate with the dividend strategy, you're still welcome here. Please chime in the conversation, because that is what it's all about. That's how we all learn. And at the end of the day, we all need to focus on our own strategy. We need to find the strategy that works best for us in our personal finance careers. So thank you for being here on PPC Ian, and I will see you on the next video.